So 2023 is predicted to be the year of high inflation, high interest rates, and now higher taxes. That's right, the IRS released a statement in their November news release stating that refunds may be smaller in 2023, which hurts many Americans who use their refund check to build up their emergency fund or pay down some debt or just cover their everyday living expenses. Now, whether you are planning to get a tax refund check or not, the bottom line is there are several reasons why you may see an increase in your tax liability. So in this video, what I want to do is cover 7 2023 tax changes that may impact you. I'm going to cover some things that impact individuals and business owners like myself, and share some tips to help you overcome and maximize your tax situation. Now, many people will see a bigger tax bill simply because of the reversal of several tax incentives used and put in place to prevent the US economy from completely collapsing a couple of years ago. So if you took advantage of any of these tax incentives, you're likely gonna see an increase in your taxes. Now, before we dive in, let me just clarify, starting with number 1, what is a tax refund and what is tax liability? So a tax refund simply means that you either A, overpaid the government and they owe you some money back, or B, you made very little income, you paid the appropriate amount of tax, and you qualify for some refundable tax credits. Now, most people fall in category A and get a refund usually because they are getting some great tax credits or great tax deductions that they may not have accounted for. So let me explain this further looking at 2 scenarios. Okay, in example A, let's say you made $50,000 and you had to pay $4,244 in taxes, which is the correct amount as a single taxpayer. In this scenario, your tax refund is 0. Now let's say in example B, your income is still $50,000, you still pay $4,244 in taxes, but later in this tax year you got married. Well, now you're gonna be in a higher standard deduction bracket and you should have only paid $2,484 in taxes. Therefore, you're owed $1,760 as a tax refund. So you can clearly see as you get tax deductions or tax credits, that's going to change your tax liability. All right, now if you need more clarification on how all of this works, I'll put a video at the end of this one called Taxes for Beginners that may help you out. Okay, so now that you understand that, let's get into some of these individual tax changes that are affecting refunds, starting with number 1, the expanded child tax credit has ended. Many American taxpayers with kids got a nice boost with some advanced child tax credits in 2020 and the expansion of it in 2021. However, this isn't the case for 2022. The CTC has dropped back to where it was before, going from $3,600 to $2,000 per qualified child or dependent, and now only available to children under 17 years old. On top of that, the credit is no longer fully refundable. Instead, it is only partially refundable to lower income households. By the way, a partial refund means that you can only receive a small portion of the tax credit as a refund, although the full amount can still be applied to your tax liability or what you owe. And of course, those advanced monthly child tax credit payments are no longer in effect. So if you have a big family with kids and you're getting tax credits, you're gonna have much less this year to wipe off some of that tax liability or add to your tax refund. All right, closely following number 1 is number 2, which is it is harder to qualify for childcare and dependent tax credits. There are now lower income qualifications to get these tax credits. Last year, the income threshold went up to $125,000 per household, but now it has reverted back to what it was in prior tax years, where in order to receive the full tax credit, you must have made less than $15,000, which is a pretty steep drop. However, households earning up to $438,000 will still get at least partial tax credit. Okay, the next big change is number 3. The temporary charitable donation limit has ended. This one may seem less severe, but for taxpayers with a strategy to donate or nonprofit owners, this one definitely stung. For example, one of our clients has a real estate development business and he donates some of his materials. And so in most prior tax years, there was an AGI or adjusted gross income limit where you could only donate 60% of your income to a qualified charitable organization. Well, This limit was extended to 100% of your adjusted gross income during the last 2 years, which made donating even better. Well, not anymore. For 2022, it's back to the 60% AGI limit. All right, now let me get into some tax changes that are going to impact some of our subscribers who are entrepreneurs and business owners. With number 5, third-party apps are reporting to the IRS. If you've been self-employed or freelancing for a few years, you're probably no stranger to third-party apps like PayPal, Venmo, Cash App, and so on. And you know you should be reporting your income on your taxes. Well, you still need to report your earnings like usual, but now the IRS will verify the amount you report using a 1099 that third-party apps are now required to share. So if you're off by $100, the IRS will know. And now a single transaction above $600 can prompt a 1099-K. According to the IRS, the lower information reporting threshold in the summary of income on Form 1099-K enables taxpayers to more easily track the amounts received. Remember, money received through third-party payment applications from friends and relatives as personal gifts or reimbursements for personal expenses are not taxable. Let's move on to another business tax change. Number 6, the enhanced meals and entertainment tax deduction is ending. Man, the last couple of tax years were awesome because it allowed business owners the ability to deduct 100% of business-related restaurant meals and drinks. However, beginning January 1st, 2023, the meal and entertainment rules will revert back to what they were under the TCJ Act, where most qualified meals will only be 50% tax deductible. These are meals like client business meals or meals provided to employees or meals during business meetings in the office or meals during business travel. So if you were someone who ended up taking a lot of business meals as a tax write-off in the prior 2 tax years, well then I'm sorry to tell you, but there's going to be some cold ice being thrown on your tax liability in 2023. Moving on to number 7, I have bonus depreciation is going to 80%. So 100% bonus depreciation of business assets like equipment, vehicles, and real estate have been around for the last few years, introduced with the tax law changes in the TCJ Act. It basically allowed you to write off 100% of a qualified asset in the year it was placed in service. So if you bought a $100,000 business vehicle, you could write off $100,000 in year 1. And even though we saw this reduction coming for a while, it feels like it comes at the wrong time as inflation and interest rates are already rising. But nonetheless, bonus depreciation will be going to 80% in 2023 and continue to fall off every year by 20% until it completely phases out. So if you're someone like me who loves to use depreciation in combination with real estate, this is definitely something that will cause your tax liability to be much higher in 2023. But hey, if you have a great tax accountant in your corner, then you still may be able to find yourself in pretty good shape, which by the way, if you need help with tax planning or tax preparation, then my company may be able to help you out. Go ahead and click the first link down in the description below to learn a little bit more about what we do. All right, and number 8 is probably something I don't have to say, but I'm gonna say it anyway because I already hear someone out there asking their accountant, why is my tax refund lower? And the reason may be number 8, there is no more economic impact payments. Over the past couple of years, millions of taxpayers receive economic impact payments, aka stimulus checks, and many people did not receive their checks in the mail, so they were allowed to claim it when they filed their 2022 tax return, which in turn increased their tax refund. So if you saw a huge, unbelievably high refund check last year, those are possibly some reasons why it's going to be lower or why you may end up paying more in taxes in 2023. Now, what are some things you can do to number 9, maximize your tax outcomes? Well, maybe this is the year that you invest a little bit more, right? You could contribute to a pre-tax retirement account and get a tax deduction, or you could make your home more energy efficient and get a tax credit, or maybe you can open up a business and write off some of the startup costs, or maybe you sell some investments, right? Like maybe it's time to get rid of some stocks that are losers to offset any capital gains you have. Also, as you're going through life, you may want to change your withholding taxes for different events, right? Like if you get married or if you have kids, or if your kids get older, you might want to change your tax withholdings so that you take out the appropriate amount of taxes. So those are some of the things that I like to recommend and personally do, and we talk about them all the time on this channel. So if you haven't already, make sure you subscribe. I'll also go ahead and link a playlist down in the description below or somewhere over here so you can learn more. And if you're looking for a great video that breaks down taxes for beginners, I want you to check that out coming up next, and I'll see you over there.